Mark Rosenthal. Here's what's happening on this Tuesday. Lots of clouds around. There could be a little peekaboo sun, slight chance of a shower. It'll be cool but less windy. Temperatures 58 to 64. Lots of clouds and cool overnight. Lows by dawn close to 50. And for tomorrow, mostly cloudy, breezy and cool. It'll be in the 50s. Rain and wind will move in for Wednesday night and Thursday. On the Money Matters Radio Network, I'm Mark Rosenthal.
Hey parents, you don't need the latest gizmo, slang, or clothes to be a perfect parent, because kids in foster care don't need perfection. They need you. For more information on how you can adopt, go to adoptuskids.org. A public service announcement from the U.S. Department of Health and Human Services. Adopt Us Kids and the Ad Council.
Former CIA officer Jason Hansen here. In my line of work, I've seen firsthand how fast the world can change. With rising geopolitical tensions and inflation eating your buying power, it's time to take action. For me, that means gold. And for gold, I exclusively trust Advantage Gold. I urge you to do the same. Call them now at 800-900-8000 for a free gold guide to discover the security that comes with owning precious metals. Again, call 800-900-8000 today.
Paid for by Advantage Gold. Performance may vary. Past performance is not indicative of future results. Always consult your financial and tax professional.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is WBNW, 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
Congratulations to the students and staff of Emergence Academy in Springfield, Massachusetts for their winning submission to the state's Power of Presence initiative. The school's amazing video will help spread the word about the power of students being in school every day. To see the video and learn more, visit us at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month. It is titled Trusts in Your Financial Plan. Mike, when you look at the big reasons that someone might want to undertake trust planning and how that dovetails with financial planning, what are the big items that come up for a lot of people?
Yeah, for most common reasons, there's four that I think about. One, in certain states and across the country, there's an estate tax, and so there's trusts that can help you mitigate the cost of that estate tax for future generations. There's trusts that can allow you to do sorts of bloodline planning. Maybe you have minor children and you're worried about passing away young. You can have trusts that are set up to deal with that situation. You have trusts that can avoid probate. And then the fourth one is sometimes a trust that might help deal with creditor protection. Sometimes a nursing home would be one of those creditors.
When we talk about financial planning, generally we're talking about things such as budgeting or investment allocations and things like that, and making that work to get you the money when you want it. How do you view trusts as fitting into that as well?
Well, it's one of those boxes that you need to check, and it goes along with other estate planning documents like a will, like a healthcare proxy. But important for most people, especially those in New England, to at least have the conversation around trusts and whether or not it fits into their strategy.
The guide, again, is titled Trusts in Your Financial Plan, and it is available for you to request at no cost. All you have to do is call 800-393-4001. The title, again, is Trusts in Your Financial Plan, and the way to request the guide is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
The Copley Square Farmers Market has returned to its original home in the beautifully renovated plaza. Open Tuesdays and Fridays. Shop for locally grown fresh fruits and vegetables, sustainably raised meats and seafood, regional cheeses and handmade items, while connecting with neighbors and one of Boston's most cherished public spaces. Visit the Copley Square Farmers Market and support farmers and local makers. Sponsored by Mass Farmers Markets, a nonprofit working to strengthen farmers across Massachusetts. Find markets near you at massfarmersmarkets.org.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Welcome back to the Financial Exchange. It's Mike, Mark, and Tucker with you here on a Tuesday. And on the docket today, we've got Home Depot earnings to report on. A first trading of a battery supplier to Tesla out in Hong Kong is going on. But, you know, the big background on the overall U.S. financial situation continues to be trade, tariffs, the tax bill making its way through Congress, and then on Friday of last week, the downgrade of the U.S. government debt and contextualizing all of this. I want to start, I guess, tangentially attached to that downgrade of the U.S. debt, which we talked a fair bit about yesterday, and look, I think the timing of the downgrade and whether or not Moody's is actually representative of anything that's going to happen in the future, fully up for debate. But I think it's worth going through again the kind of system of deficits in the United States, how they have worked, how big they have gotten, and just kind of the trade-off that Americans have been making and our lawmakers have been making over the last quarter century or so when it comes to the global financial system, if that's all right with you, Mark. And I'm probably going to rely on you to fill in some of the blanks here. But if you go take a look at the data here, we've been running deficits in this country compared to, I like taking a look at it, the federal surplus or deficit as a percentage of gross domestic product is how it's usually phrased. And we've talked at length about how over the last few years, that number has been 5-6% even during a relatively stable economy, and that's abnormal. During real times of crisis, where the economy is falling apart or we're in war, these numbers have expanded greatly. So, for example, in 2020, the federal deficit as a percentage of GDP ran 14.7%. In 2009, it ran 9 3/4. Heck, in 1943, it ran 30%. So this is normal, but what's somewhat abnormal has been the continued trend line of this getting more significant year after year, really since the late 90s, early 2000s, which was the last time the United States ran a budget surplus of any sort in the United States. So I guess the question that I want to try and answer is, why does this exist? How did we kind of get here with policy and just by decision-making on the part of Americans? And now that we're attempting to kind of correct some of this issue, either by cutting spending or changing the trade imbalances with other countries, how does it all relate together, I guess, is the big question that I have here, Mark. And let's start at the very basics, because Americans have pretty low savings rates. And so when we pull in income, we tend to not put it away in savings accounts or investments. We tend to spend it. That's a common theme on our program. So we tend to spend that money. Some of it ends up in, U.S. companies' coffers as profits. A lot of it ends up in foreign companies' coffers because we buy toys and cars and all sorts of stuff. What then happens with those dollars?
Can I phrase the question a little bit differently?
Yeah, please do.
What are interest rates? It's the price of time. It's what you're compensated for
time,
consuming today in exchange for consuming tomorrow. It's a reward. What determines interest rates? They're globally determined by the balance of supply and demand for savings. So the reason for just starting with that basic precept, the reason for the concern over the federal deficit, which is the difference between revenue, what the government takes in, and spending, what the government, spends, and the concern over the deficit and the debt, which is the cumulative deficit plus interest. It's useful to just keep these basic ideas in mind, is that government competes with us for us. I say us, it's mostly we borrow for homes mainly,
sure,
but some in small businesses borrow. Government's competing with us for loanable funds. That competition, all else equal, pushes up the price of borrowing, pushes up interest rates.
So example here would be the U.S. government is issuing a 10-year bond. Apple is offering a 10-year bond.
There you go. You've got
Which one should I buy? Which one's riskier given the circumstances?
Yeah, there are other considerations too. I'm stripping out risk premia and other stuff and liquidity. Treasury market is deep. Treasuries are in theory risk-free. Debt can be inflated away or even defaulted on, but we call them risk-free. Corporate bonds don't have those characteristics. Corporate bonds are callable. So there are all kinds of people can quibble on the specifics. But look, the bottom line is, at some point, the debt of the federal government relative to the annual flow of goods and services that we produce, which we call gross domestic product or GDP, will get so big. This has happened in other countries, and researchers famously looked at this in the 2000s, so big that the premium that people will require, then there is a risk premium. People start to think maybe they're going to inflate this debt away. Maybe they'll impose, a fee for transacting in treasuries, as the current administration was toying with imposing on foreigners a few weeks ago. That's an implicit default. As U.S. debt becomes large relative to our ability to support it, that's where the debt to GDP ratio measures. At some point, people might start demanding more to hold U.S. debt, i.e. push up interest rates, and that will flow through to interest rates throughout the not just U.S. but world economy.
And this is where it kind of breaks down for a lot of folks, I think, because it's tempting to look at the U.S. debt situation and the U.S. spending situation as a household budget. And I get that it's the easiest comparison, right? And there are plenty of true comparisons you can make here.
In some ways that works, in some ways it doesn't.
Right. In the U.S., in the household budget scenario, you get to a point where, okay, I can't pay my bills anymore, and then you get sent to collections, and everything you have gets taken, you go to bankruptcy, and that's how that gets resolved. In The U.S. government situation, it is different. In the U.S. government situation, if you continue to run big deficits, i.e. you spend more than you are taking in, then you print more money in order to satisfy that. You issue more debt. And instead of ultimately having a bankruptcy moment, you more likely have a outcome eventually, which has not occurred, to be clear, over the last 20 years.
World War II is a good example.
Okay, go.
Debt to GDP well over 100%. Pretty damn good investment, though. No one's going to argue. Now, government was very small before the World Wars I and II. It gradually grew to nearly half the economy. I'm just ballparking it during World War II. After World War II, the economy grew not immediately after, but once we cleared out the fiscal problems created by, for example, the Korean War, the U.S. economy grew very quickly, and inflation was somewhat elevated in the late 40s, very, very early 50s. So a combination of high inflation and fast economic growth got debt to GDP, that critical ratio, if you're talking about fiscal policy and the government's ability ultimately to borrow, to tap capital markets, brought that ratio way down to, call it the 20s, where it stayed for decades and decades until the 1980s.
So the part of the trade-off here that I think a lot of people don't fully understand or are ignoring, I don't know which, is the reason the United States has been able to run these big deficits, which I'm not saying are a good thing to be doing, I'm just saying that they have happened over the last 25 years. The reason that we've been able to do so while not facing 15% mortgage rates, for example, is in part, at least, as I'm understanding, is at least in part due to the fact that we have trade imbalances with all these countries, that we send a whole bunch of dollars to China, Japan, Europe, and then they turn around, and what do they do with them? Well, they might invest in U.S. companies. They also might buy our debt, therefore keeping those rates low for all of us Americans.
So, for example, in addition to the $2 trillion or so that we're going to borrow this year, because the revenues will again exceed receipts at the federal level, and those expenses are only going up, as you know. We need to roll over about $9 trillion in existing Treasury debt. Who's going to buy that? Well, insurance companies will buy some of it, U.S. insurance companies, banks, people, our clients here at Armstrong Advisory Group will buy some of it. Foreigners own about a third of U.S. debt. Where do they get the dollars? This is what you're getting at. Where do they get the dollars to buy that? Go ahead. You already said it. They get it from the dollars we send abroad. When we some of it you can buy dollars on the open market. So there's some leakage in the little system as I'm explaining it here. It's not a perfect description. But they get that because we send dollars abroad. So the trade deficit, which politicians love to wring their hands about, I could get, and we could get on another tangent about that. But it is what it is, Mike, as you said. The flip side of the trade deficit is a capital account surplus. All those dollars we send abroad buying Sony stuff and what have you gets recycled to continue with the example, Sony into, say, U.S. Treasuries. It must come back. It's called the balance of payments, and it must balance.
So, I'm not trying to put judgment on this system as to whether or not it's been a good or a bad
I would
system.
argue that it has been awesome for American standards of living, by the way, but go ahead, sorry.
It's been a trade-off, right? You've had fewer manufacturing jobs in the United States, but you've also had the ability to buy homes at really low interest rates. You've had companies able to borrow money. A lot of different trade-offs here. And my point with all of this, and it coincides with Moody's downgrade on Friday, and I don't think that they explicitly were calling any of these things out. But, hey, these deficits are still growing. We are facing down another big tax cut that will be partly offset, presumably, by tariffs. But if your overall goal here is to continue to run big deficits while at the same time challenging the system by which foreigners bought this U.S. government debt, it's a potential recipe for red flags and smoke. And I don't think we're really seeing any of that smoke. We haven't seen any of that smoke for the last 25 years. And these theories of rising interest rates because of deficits have not come true yet. But I think understanding that context is really fundamental to understanding, hey, what's happening with interest rates today? Why are yields touching 5%, et cetera, et cetera? It's all that global system. of trade and dollars coming back into the United States.
If you tried to close off the U.S. economy, unlike Japan where they have very high savings rates, they buy most of their own debt. You try to close off the U.S. economy, our interest rates would be much, much higher.
Let's take a quick break. When we come back, I want to talk a little bit more about that big financial system. But there's a piece from Financial Times today. Will Trump's tariff climb down save the U.S. from recession? We'll be covering that next here on the Financial Exchange.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. Creating an estate plan can be a difficult process if you aren't working with an expert who can make sure your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and their new monthly guide is called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may correct an issue that could come back to haunt you in the years to come. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. That's 866-848-5699 or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Trust can play a key role in your financial strategy, and understanding the different kinds and their purpose may help you make the right decisions for your overall plan. Hi, this is Chuck Zada from the Armstrong Advisory Group. Trusts are utilized for a variety of reasons, but the most basic use is to make settling an estate easier. Trusts have the ability to bypass probate, which can save you significant time and money, while allowing your assets to be distributed directly to your beneficiaries. Our new guide this month is called Trusts in Your Financial Plan, and you can get it by calling 800-393-4001. Learn about trusts and their possible benefits to your financial strategy by requesting your free guide today. That number again is 800-393-4001, or request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by Margaritaville Resort Cape Cod in Hyannis. Looking for a great vacation spot? Look no further than Margaritaville Resort Cape Cod. Located just off Route 6, Margaritaville Resort Cape Cod is perfect for a weekend getaway or a fun-filled family vacation. You'll enjoy first-class accommodations and dining in our incredible Fins Up Water Park and, of course, the gorgeous pageantry of the Cape. Visit Margaritaville Resorts CapeCod.com for reservations and more information.
Mark, it was only 2 to 3 short weeks ago that I feel as though every financial journalist out there was finding someone to interview calling for a 90% probability of recession or a coin toss. I myself said, hey, coin toss in terms of recession probabilities earlier this year with the massive face of tariffs looming on the horizon. Those have obviously been backed off substantially. It's not to say that there won't come again, but I do get the sense that investors, at least, are perceiving a lot more certainty around trade policy for this year than they were just a few weeks ago. And I would generally agree there's more certainty around all of that. What's surprising to me, and I saw Jamie Dimon once again stepping out there and talking about markets in a negative fashion the other day, it was compared to what we expected on January 1st, the trade tariff situation is substantially I guess, worse from an investor perspective than anyone would have bet. And yet here we are, marking near all-time highs on the stock market and really waving away, I think, any real risk of recession. And I guess the question is ultimately where do things go? Nobody knows whether or not we're going to have a recession. Trying to call it is like trying to guess where oil prices are going to be, so good luck. But I would generally agree, hey, the likelihood of recession has to come down the less these tariffs are in the limelight. And then just, other piece of this, if you do get a big tax bill, it just becomes economically difficult to get a recession if you're running deficits to GDP of 5, 6, 7%, which seems entirely possible.
Well, I don't know about that.
No?
It depends on what. Well, not much in this tax bill is likely to stimulate economic activity. We'll get on this tax bill and why it's deeply, deeply flawed from an economic growth point of view at another point, I guess. But so I don't want to get on that tangent right now. With respect to recession calls, I think you're right. Serious people don't make recession calls for the most part. They talk in terms of likelihoods and, on balance, all else equal.
Yeah, does this feel like a more growth economy or a more contraction economy?
You could
where
distinguish
the risks?
you could distinguish the armchair kind of dabblers from the serious researchers by how much conviction they have in their own ability to foretell the future. And recessions are not absent a few couple of really glaring counterexamples like the COVID recession where the economy was shut down. Well, then of course it's going to contract. Other than that, very hard to tell, as you said. And it's very hard to get unemployment numbers resulting from some of the supply chain snarl-ups that Craig Fuller talked about on this show. He said something like 500,000 jobs. You plug that into a standard mini model, I'll call it, and do a little back of the envelope. It's very hard to, starting with GDP running somewhere around 2%, where it appears to be today, using the Atlanta Fed's a real-time tracker. Very hard to get to an unemployment number big enough using the Fuller estimate to justify a recession call.
So you're not. Yeah, I think that's well summarized, and I think a writer, an op-ed in Bloomberg, put it the same way, which is you're very likely to get some sort of slowdown as a result of tariff uncertainty. Businesses are not making the same investments that they were. They might not be hiring at the same pace they might have considered. They're not going to expand that big manufacturing plant here, there, or anywhere else. They're going to wait and see in the face of a lot of these tariffs, and the fewer uncertainties there are, the more of those decisions they will make. But when you're already at such a strong starting point, I think is the way that she put it, which is...
Look, this is where I ran into problems with my mini model. How strong are we at? How strong is the starting point? Should I have assumed
let's look at just
2% GDP growth? Or this is where I got a little...
So let's look at the two items that the Fed focuses most on. And because those two, I think, are, I'm data mining here, but pretty compelling stories in terms of strength. Unemployment at 4.2% and PCE inflation around 2.5%. Is that
those
about
don't
where we
factor into the approach, though, unfortunately. I need an estimate of where the GDP is right now, so I used Atlanta Fed's.
Yep.
I even took a percentage point off of that. I even doubled Craig Fuller's jobs number. Like, can you get me to negative? And you get to barely negative GDP growth under very aggressive assumptions, but that's where we were in the first quarter. Let's not forget, everybody has kind of dismissed that as a blip, but GDP contracted.
In the first quarter.
The economy's output of goods and services, gross domestic product, GDP, it contracted in the first quarter. There's momentum in that, and that worries me a little bit. I wouldn't, again, go so far as to claim that a recession was around the corner. That's a risky and kind of misguided business to be in, but it's very hard to get there just based on what we know today. Is all I can say.
Yeah, and so as we've said before, I think a lot of this direction is heavily dependent on how much are we talking about tax cuts 3 months from now versus how much are we talking about tariff increases 3 months from now, and I genuinely don't know, and I'm not sure many people do. Quick break, Wall Street Watch is coming up, and then we're talking Home Depot when we return.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts and Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Tariffs.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today, we're talking about the top estate planning mistakes to avoid. Todd, a lot of people create their estate plan, but there are some that don't actually transfer assets into it. Can you explain why this is such a big mistake?
Sure. I mean, I'm going to try to explain it both from a revocable and an irrevocable planning standpoint. With the revocable, if you don't put assets in there, you end up leaving them owned perhaps jointly if you're married, and designated beneficiaries and the like. But if everything goes to the spouse, when one dies, then you've completely avoided your estate plan. In other words, you've set your trust up, but you went around it by leaving everything to the spouse instead of going through it by funding the trust and cramming down the assets to shelter some from estate taxes on the first death, so there's less taxed on the second death. And ultimately, on the second death, if you don't plan, there could be a probate problem because everything would go to probate if it's in their own name. The other big reason is with an irrevocable trust, of course, not funding it also can result in estate tax problems by the same way it did with the revocable trust. But in addition to not funding them with the irrevocable, you don't even begin the 5-year waiting period to get the assets protected from the nursing home. So there's a much bigger problem not funding an irrevocable trust versus not funding a revocable trust. So make sure you fund your trust if you do your planning.
Well, luckily, Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by simply calling 866-848-5699, 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets mostly shrugged off Moody's downgrade of the U.S. government's credit rating yesterday, extending the S&P 500's winning streak to 6. Today, markets are in negative territory as investors digest more retailer earnings from Home Depot. Right now, Dow is down by about 0.25% or 99 points. S&P 500 is down just over 0.33% or 21 points. And the NASDAQ is down just over 0.5% lower or 102 points. Russell 2000 dipping 3 points lower. 10-year Treasury yield up 1 basis point, now at 4.49%. And crude oil is off about 0.2%, trading at $62.27 a barrel. Home Depot up by about 0.2% after the home improvement retailer maintained its full-year guidance. For the first quarter, the company shares climbed more than expected as customers continued to spend on smaller projects. In addition, Home Depot signaled it plans to hold its prices steady despite tariffs. Mike and Mark will have more on Home Depot coming up. Meanwhile, UnitedHealth shares continue to rebound from last week's plunge, jumping 8% yesterday, driven by securities filings showing returning chief executive Stephen Hemsley and other company insiders buying shares. Today, UnitedHealth shares are dipping slightly into negative territory. Elsewhere, Levi Strauss agreed to sell Dockers to brand management firm Authentic Brands Group for $311 million. Levi is up 2.5%. Cruise operator Viking posted better than expected first quarter results. However, that stock is retreating by 5%. Uber up by about 1% following news that Uber and Waymo will partner to foster autonomous ride-sharing in Atlanta. D-Wave Quantum shares jumping by 28% after the company's latest quantum computing system, Advantage 2, hit the market. And after today's closing bell, we'll see earnings from Palo Alto Networks and Toll Brothers. I'm Tucker Silva, and that's Wall Street Watch.
Tucker mentioned it briefly, but Home Depot was out with earnings this morning, and they were fine. I think they were just fine is the only way to describe it. This is a company that saw massive sales growth during the COVID pandemic when everyone was putting on a deck and buying a hot tub and a solo stove. The most recent quarter, they saw their same-store sales decline by 0.3 percentage point. So, again, why I described it as fine is basically you did the exact same thing you did last year. I think two things are moving the stock higher, or maybe moving the stock higher today. One would be they maintained their forecast. Many companies, especially in the retail space, have just been pulling any sort of guidance that they have about the future state of their business based on concerns about tariff, concerns about recession. Maybe Home Depot just has a better outlook. Maybe that narrative is dead and companies are not going to keep doing that. I'm not sure which, but they did maintain their forecast for the rest of the year. The other thing that, again, I don't know if this is driving the stock one direction or another, but I just found compelling and interesting, is Home Depot did not use the Walmart cover to say we're raising prices. We talked a lot about this last week when Walmart came out and said, yeah, tariffs are going to cause us to raise prices. Home Depot explicitly asked the question and said, no, we do not see tariffs raising prices for our customers. And that is probably a welcome sign from investors, but also,
wait a minute. Why would that be a welcome sign? Doesn't that mean they eat the increases?
I think it's more that we don't source enough stuff from China to need to, is the welcome sign. So I was looking for some indication of where this is. One, they did say that in their earnings call, they said by this time next year, no single country will represent more than 10% of our products that we sell in store, other than the United States. So that's a compelling story, right? If you have that level of diversification, hey, I'm sure that a good chunk of it is made in the U.S., but of everything else that we sell, no more than 10% comes from any one country, or at least it won't by this time next year. I was trying to get some indication of, hey, how much of this stuff used to come from China? Did they intentionally diversify away? The only report that I could find was printed in MarketWatch several years ago. D.A. Davidson, which is an analyst company, noted that in the 18 to 19 timeframe, about 30% of their goods were supplied from China. If that ends up being true, that's a pretty impressive diversification away, right? To take a number that was 30% in 2018 down to less than 10% by 2026, especially when it's China, I find that interesting if these data points are correct.
Yeah, does that help? We started a trade war not just with China, but with the whole world. A company, you can either have one of two things. You can have companies pass the costs through, and consumers then substitute away from foreign-made goods into U.S. goods, which I thought was the whole point of this, but that changes like every day, the whole point of this. I don't know what the point of this trade war is.
By the way, I'm becoming more and more compelled to believe that it's about raising tax revenue, but
okay,
we'll see what tomorrow brings.
So it's even more important that those costs get passed through and that they stick with it. If it's about raising revenue, you don't change the rate every day. Imagine if they changed your tax rate every day, or your state changed the sales tax every day. You'd wonder about their sanity, the policymakers' sanity, that is. But you can't have both high profits and a high stock market, which is just publicly traded companies, but Home Depot and Lowe's and others that stock goods that you would normally associate being made abroad because they're cheap, companies that you would associate with those practices. You can't have both high stock prices and no pass-through.
Right.
Because if they're not passing through, they're eating it. Or their suppliers are eating it, so somebody's gonna get the shaft.
That was the comment that I made yesterday in regard to Walmart was, you know what kind of company I don't want to own is one that capitulates to the White House and eats a bunch of expenses to shrink margins. That's not a terribly attractive investment for any company out there, and that's what the pressure that Walmart's
facing. If you are
facing.
doing that, you are not getting consumers to change their habits, because now I'm indifferent again between the cheap Chinese-made thing and, say, the domestically made alternative, although in many cases there is no domestically made alternative to some of the cheaper stuff. I see all these goals being they're not really goals. All these potential objectives, basically the same thing. Sounds a little softer to me. They're all intention, Mike.
Yep.
And you're not going to achieve any of that. I don't know what
they're not only intention. Sometimes they're directly opposed to one another.
Yeah, I guess I'm.
You're given a little bit of leeway, right? The idea of making more stuff in America is diametrically opposed to raising tax revenue from tariffs.
Right. Period. Full stop.
It's not intention. It's just they can't both exist at the same time. At least not long term. They might be able to exist, together for a couple years, but generally speaking, you cannot have a bunch of new revenue raised from tariffs in order to offset tax cuts, while at the same time saying, and then it's going to make everyone bring their manufacturing jobs back to the United States. No, that doesn't really work. And so I'm with you there. And my general conclusion, and we talked about this yesterday on the program too, is based on recent comments we are seeing, based on the trip to the Middle East, where clearly one of the main goals there was incentivizing investment back into the United States, buying Treasury debt, it seems to me that the administration is focusing on two things. One, where is the next dollar of the U.S. government debt going to come? Where's the next buyer of the U.S. government debt going to come from? And the answer might be the Middle East to some degree. And then also, how are we going to raise enough revenue to pay for some of these tax cuts without blowing out the deficits to higher levels? And so, at least most recently, that's where I'm landing, which would argue for relatively low deficits compared to what we have talked about in previous days, right? As we talked about, if you're putting 145% tariffs on China, you're not going to raise any revenue because no trade is going to occur. If you're leveling 10% tariffs on China permanently, you might have decrease in consumption, but you're probably going to raise some revenue ultimately on that.
And that'll come at the expense of importers.
Yeah. Importers and therefore consumers. Agreed on all fronts. It's a tax increase, but that's kind of where I've been landing over the last 2 weeks, and I'm sure my opinion on that will change next time the tariffs change. But in any case, Home Depot earnings, relatively stable. They face, I think, a challenging market because people aren't buying homes. There's not a whole lot of transactions hitting the market, and importantly, too, some of the areas of the country that historically, over the last decade, have meant a lot of home building, Florida, Texas, are slowing dramatically, and there's not really a whole lot of other parts of the country that are going to pick up that slack. Let's take a quick break. When we come back, we'll finally get to that tax bill that's making its way through Congress. That's next here on the Financial Exchange.
Breaking business and financial news first throughout the day, only here on the Financial Exchange Radio Network. There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts and Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke. Sponsored by the Massachusetts Department of Public Health.
Celebrate the arrival of summer with the best of what's local and fresh. Farmers markets across Massachusetts are packed with vibrant produce, pasture-raised meats, local seafood, small batch cheeses, and artisan-made goods. From ripe strawberries to artisan finds, markets are the soul of our neighborhoods. Stop by your community market and support farmers and local makers. Sponsored by Mass Farmers Markets, helping grow farmers markets across the state. Find your local market at massfarmersmarkets.org.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John and are consistently voted one of the top Caribbean vacation destinations. Enjoy world-class cuisine, pristine beaches, rich history, and a vibrant nightlife. Book your trip now to visit America's Caribbean Paradise, the United States Virgin Islands. For reservations and more information, go to visitusvi.com. That's visitusvi.com.
The tax bill continues to make its way through the House at the moment. I would mention details of it, and we can go through a few of them, but quite honestly, here's what's going to happen is the House is going to likely pass a bill, I think, in the next few days here because deals keep getting made. Any of the real deficit hawks have been kind of pushed to the side at this point, and there's a new proposal out for the more middle-of-the-road GOP members in liberal states for the SALT proposal. The latest here is they're going to bump that up to $40,000 with an income cap of $750,000. So I tend to think that this is going to pass the House. The problem is that the Senate has basically said we're not even going to consider this and we're going to write our own bill on taxes and then send it back to the House. So I don't know where a lot of these things are going to land, but a few things seem likely at this stage. One of them is that SALT deduction cap increasing from the current $10,000 limit, which was put into the first Trump tax cuts, likely going to bump that up somewhere, I think, between $30,000 and $40,000. The other piece continues to be this tax on tips fight, and it's really tricky to see how it's going to work, but it's got more legs than I thought that it would at this stage. And the New York Times actually has a pretty good piece on who's coming out to oppose this, which is an interesting group of different people. But for instance, a lot of restaurant owners are saying, hey, this doesn't really work for our business because we're not going to be able to hire any busboys, dishwashers, or cook staff because they're all going to want to be work in front of the house where they can pay no taxes on a big portion of their wages. And so I'll be really interested to see where that one piece ends up.
Do you think people will tip more or less if they know those tips won't be taxed? You as a customer. You're on the bubble, 15-20%, average service.
The taxation of it honestly would not factor into my decision, but here's what would. If they actually roll out no taxes on tips, then the annoying situation of needing to tip everyone you meet is going to get so much worse that I will naturally pull back on tipping because of it. Because whether I go to a Starbucks, which you can tip now at, my local coffee shop, if I go to my hardware store, everyone's going to be holding out their hands for a tip because of these new rules. And so for that reason alone, I think the natural rate at which we tip is going to come down because you're just going to feel tip stress from all this.
I can't think of a good argument for no, and I know both presidential candidates advocated it. I can't think of a good economic argument. Number one, I'm not sure how it's going to change behavior of customers.
Right.
They may end up tipping a little bit less, just my theory, and maybe maybe some others have.
My theory is the only reason that this is even being proposed, and I think I've mentioned this to you before, I think the only reason that this is even being proposed is because in decades past, you would tip with cash, and a whole bunch of people never declared the cash as income. They just perpetuated fraud and didn't declare it. Now the system's changed. I would be willing to bet that 90% of tips are done with digital transactions, and therefore you have no choice but to declare the income. And so compared to where you were 30 years ago, you feel like you're getting kind of ripped off as a server.
I also wonder about what it does for the behavior of wait staff. Would you work more or less if tips were not taxed?
Yeah, we've had this discussion. I don't know.
This is something that you learn in your first economics. It's microeconomics specifically, which not everybody takes, but there are income effects.
Yeah.
Well, I'm richer, so I don't have to work that additional 5 hours a week to meet my savings goals. And then there are substitution effects.
Right.
Well, this income is now relatively more favorable after taxes. So there are no taxes, in fact. So I will do more of that activity. Mm-hmm. And it's not always clear whether the net effect, when you consider the changes in behavior that result from income and substitution effects, whether or not this will induce people to work more. I just don't know what the economic rationale is for no taxes on tips. I don't know what the economic rationale is.
I don't think there's a good economic one.
Okay.
I think there's the only rationale that I have is the
you
one
want
that
the
I
wage
mentioned.
staff vote. Okay,
Yeah.
great. And equally stupid, forgive me, but we're talking non-analytically here. I'll just call it stupid because I can't explain it, is expensing car loan interest. It does nothing about the affordability problem. It's not going to push car prices down. It probably does the opposite. And why are we favoring auto loan interest over other types of interest? I know they all used to be expensible back in the day.
That one I can explain a little bit better.
Okay,
because
what's the rationale?
It's we want to manufacture more cars here, so we're only going to allow you to deduct the interest if it's an American-made car. I can at least explain. I don't know that it's a good idea. I can at least explain, though, why I think it's happening.
Okay.
Incentivize more people to buy American-made cars by allowing them to deduct the interest on those American-made cars and not the foreign ones.
Okay.
So that's where I land.
Yeah,
here's what you need to think about if you're listening to this right now. In my opinion, at least, it's very likely that the tax code is going to look somewhat different 6 months from now than it does today.
More convoluted.
Right now, tax planners, financial advisors of all sort are planning on potentially tax rates going up in 2026. I don't think they likely do, but there are likely to be more changes than just taxes on tips, taxes on Social Security, taxes on local income, and the deductibility of all of that. Taxes, like it or not, are an integral part of everyone's financial plan. And if you're not thinking about where tax rates could be a decade from now, you're likely not taking the steps in your plan today to either take advantage of that or and even in some cases, make decisions that would cause you to pay more taxes today to avoid them in the future. If you are not doing that type of long-term planning, if you're not getting that type of full, all-encompassing planning, please give the folks at Armstrong Advisory Group a call to talk to us about your financial scenario. The number is 800-393-4001. Again, Armstrong Advisory Group at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mark, the other big looming point about this tax bill that we didn't even get to, because frankly the debate around what taxes get in and what gets cut from the bill is more interesting, is will bond investors tolerate the tax bill? I think they are likely to do so, and by that I mean, are investors likely to dump U.S. bonds because of concerns about the deficit increase? My answer is I don't think so, but it would be a much bigger deal than any of the details of the tax bill if they did.
It's hard to say. Look, if this administration just came out in favor definitively of Fed independence, I think they do themselves a huge favor. That would at least remove one big risk, the risk of out-of-control inflation from people's calculus.
Yeah.
Will they swallow this along with the $9 or so trillion that needs to be rolled over, plus the $2+ trillion that where the government was going to hit the Treasury market up for? I really don't know.
Quick break. Markets remain in negative territory. We'll have a full recap when we come back and more. That's next on the Financial Exchange.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818, 800-378-3818, 800-378-3818. That's 800-378-3818. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Margaritaville Resort Cape Cod is perfect for your next New England vacation. Located just off Route 6 in Hyannis, the resort has everything you need to enjoy an incredible week with your family or a quick weekend getaway. Along with first-class accommodations and food, Fins Up Water Park is packed with aquatic adventures that will keep the kids entertained for hours. The summer season is coming soon, so make plans today for a fun-filled vacation at Margaritaville Resort Cape Cod. For more information and to book your trip, visit MargaritavilleResortsCapeCod.com.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Trusts in Your Financial Plan. Mike, a lot of times when we talk about financial planning, it's with the idea of having your money available to you to use when you need to use it. How do trusts work to kind of keep that idea going, not just for yourself, but also for the next generation as well?
Sure, and it doesn't always need to be the next generation, because how many times have you heard somebody say, hey, look, I raised my kids, they're in a good spot, I want the less check I write to bounce. I'm spending this money. But, there can be situations where trust can benefit even a married couple in the event of a lawsuit or a nursing home that's unexpected, especially if there's a big age gap. That can be critical. But for next generation planning, it gets much more common, and especially in the New England area where most states have an estate tax, there's a lot that can be done from a multi-generational planning perspective to, if not eliminate those taxes, at least mitigate them to a large degree. I mean, you think about here in New England, the value of your primary residence, which you sell, it might not be subject to capital gains tax, but if you die, is most certainly subject to estate taxes. There's a lot that can be done in the way of trust planning.
Our guide this month is titled Trusts in Your Financial Plan, and you can request it by calling 800-393-4001. Again, that number is 800-393-4001, and the guide this month is titled Trusts in Your Financial Plan and details a number of ideas about how you can fit trusts into your financial plan.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Welcome back to the Financial Exchange. It's Mike, Mark, and Tucker with you on a Tuesday. Stocks in negative territory here, been bumping around the negative 0.1 to 0.5% range all morning. We've got the Dow currently off 116 points, 0.25%. The S&P 500 off 20 points, 0.33%, and the Nasdaq off 91 points, or about 0.5%. The Russell 2000 is actually flat for the day. In the bond market, we did see the 30-year Treasury bond hit that 5% yield briefly before trending back down. Yield's not moving too much today as of the moment. The yield on the 10-year Treasury sitting at 4.483%. Oil prices down a bit, down to about 0.5% at the moment, $62.38 per barrel on the West Texas crude, and the national average for a gallon of gas sitting at $3.18. Speaking of gasoline, I had to buy a new minivan recently. Our 10-year-old one accidentally got totaled in a car accident, so everyone was safe, which was most important, but we were in the market for a new minivan. It's a new Toyota Sienna. I've talked about my lame infatuation with minivans at length on this program. Would either of you like to guess, so it's a hybrid engine, all-wheel drive, would you like to guess how much range we get out of this new car?
It's a hybrid?
It's not a plug-in, it's just a regular old hybrid, yeah.
Okay, so if it's a hybrid, then you're probably in the high 30s for a minivan?
So, yeah, miles per gallon. But, like, with the gas plus the electric motor, we are getting a 630-mile range on this thing. Our previous one was like 300. I don't know. I'm just impressed by that because I only drive really old cars.
Oh, I thought you were asking miles per gallon.
Yeah, the miles per gallon is like 30s. But the range on one of these vehicles... I said range, not miles per gallon, Tucker. Don't get all frustrated when you give the wrong answer.
I gave the right answer. Go ahead.
I don't know. I'm just impressed that I'm going to be able to drive for 600 plus miles on one tank of gas and not have to refill. I'm very happy with that outcome.
In a minivan.
Yep. Look.
Good for you, Michael.
It's cool, all right? Get over yourselves. The minivans are hip. They are back in fashion, and I look cool in my all-black minivan now. Okay? Anything else catching your eyes in markets this morning,
If
Mark
you put
or
your
Tucker?
flashers on, do people think there's a funeral behind them?
Well, they do, yeah. Yeah, it does look a bit
a
like
good way to
it does
move.
look a bit like a hearse. I'm aware of that, so I try not to put the flashers on. But yeah, if driving really slowly, sometimes a cop will blast by on his motorcycle and try and clear traffic for me. So it's happened a couple times now.
You got right into the funeral parlor. If you're going to go to a wake, you don't have to.
Precisely,
You got the captain's chairs in those things? In the Sienna? You got the captain's chairs?
Does the Pope wear a funny hat?
Oh, look at you.
Yeah.
Captain chair.
Yeah.
Leather?
Does the bear poop in the woods? I only have 2 of these, so stop asking questions. In terms of big market news today, we did have Home Depot earnings out this morning. We'll have Lowe's tomorrow. I believe that TJX is going as well. In terms of Home Depot, the big news, other than the earnings themselves, which were fine, nothing great, was that they are not raising prices. This made headlines because Walmart just the other day said that they would be raising prices in the face of tariffs. Big differences between Home Depot and Walmart, obviously. In terms of sourcing of products, Home Depot claims that next year, the United States will be the only country that accounts for more than 10% of the products sold in their stores. The other piece would be that the operating margins, the EBITDA margins for a Home Depot, for example, are about triple those of Walmart. So again, not that any company wants to be absorbing price increases, but they're just a higher margin business than your Walmart, which partly operates in the grocery business and therefore has very, very low margins. I will be interested to hear, hey, does TJX, for example, which almost undoubtedly sources much more of their material outside of the United States, do they talk about price increases? Did they use the Walmart cover as kind of that cover to be able to raise prices? We will see when they report earnings later this week. Our top story of the hour is from Connor Sen, saying that the next great job churn is already starting, and in a great picture for this piece, this dystopian banner from the streets of San Francisco. Artisans, which is the name of the company that's promoting the AI tool, Artisans won't complain about work-life balance, and it's this picture of a presumably woman that's supposed to look like a robot employee. And it's all about the start of the job churn and what types of jobs are starting to be affected by artificial intelligence. And I had a good quote on this from a random person on X, formerly Twitter. Quote, "The future was supposed to free up our time from work so we could spend it on higher pursuits. Instead, we created AI that makes art while we all work." And that is kind of the weird dystopian moment that we're in. AIs of today are pretty good at creating new logos. They're fairly good at making cartoon artwork for advertisements. They're pretty good at impersonating humans and writing a poem for you or summarizing an article for you. They're not great at flipping burgers at the local McDonald's. They are not too good at driving your car for you or restocking the shelves at Walmart. And I just find it interesting that, hey, this is where the job disruption is going to come, therefore, is maybe not so much in the low-income jobs that everybody thought were going to be wiped out, right? 2 decades ago when everybody was talking about raising the minimum wage in certain states, the conversation was all about, well, nobody's going to be working at McDonald's anymore because robots are going to do that job. Instead, it's, we're not going to need law clerks in legal offices anymore because I can have an AI tool that just summarizes 15 legal cases for me and gives me a pretty good estimation of it. Or we're not going to need graphic designers as much as we used to because I can have an AI tool that will design 15 different logos for me and I can just choose the one I like best. I don't know. It's just, it's very interesting to me where this is going, but that's where the churn seems to be coming from.
But the article makes what these researchers did is kind of, I'm skimming the paper here as you talk. What they ask is, how disruptive is generative AI likely to be? Are we seeing any evidence that what happened to manufacturing in the 70s and 80s, the massive, I'll call it hollowing out, even though that's a little bit dramatic, there was a huge shift from manufacturing to services over the past several decades.
And you can blame part of that on globalization, but a lot of it on automation.
Yeah, they don't really get into that. That's really the key point. Technological, because it happened all over the world.
Sure.
We tend to lament that we don't make anything here anymore. Every advanced country would make a similar, would have similar complaints. So is generative AI, these researchers ask, I mean, the Connor Sen article was like almost as long as the research paper, so I just went to the research paper. Now, this is not peer-reviewed, meaning they put it out there, but no publication has accepted it yet. I don't know. There may be some big problem. So one of the problems with looking at something that's not peer-reviewed, these people run to something called Social Science Research Network, where people just post their work before it gets accepted by a peer-reviewed journal. The peer-reviewed journal process is a pain. I get that. But all the data here could be made up. I'm not saying that it is, but this could be
nobody's
total,
reviewed it.
This could be total BS. But it's nevertheless an interesting approach. They ask, what if the same thing that happened to manufacturing, due to, as you point out, automation and other factors, happens to white-collar jobs that generative AI can gradually replace? What is that likely to do to unemployment? Say here in Boston, which they talk about, and which this article covers, where unemployment has gone up from about 3.5% to a little over 4%. Is that due to generative AI? Very hard to tease that out, which is where I run into some problems with using this article to make policy or draw conclusions. But nevertheless, the authors of this particular paper make the interesting point that a big shift away from the white-collar jobs supporting finance and technology and other industries could be underway as generative AI replaces what many entry-level type jobs, people that filled entry-level type jobs have done historically. What are the political implications? What are the demographic implications? They're not necessarily, they're bad probably for us here in the Northeast.
Yeah, it's a fascinating theory, right? Are the same strengths that made incomes and property values in areas like San Francisco, areas like Boston shoot through the roof over the last quarter century? Are those same factors going to be the one that lead those same areas into some sort of higher unemployment, lower income scenario?
On the extreme end of it is the Boston DC corridor going to become like the Rust Belt of the 2030s? The authors of this study say that the downstream effects, I'll just read their conclusion very briefly. Downstream effects of generative AI appear more benign than the downstream adjustments, which is a euphemism for the enormous displacements that cost people their jobs and livelihoods and cause them to have to move or something. Far more benign, they expect, than the adjustments due to the manufacturing shock. So no new Rust Belt, providing we adapt. Make investments in people, make it easier to switch jobs and stuff like that. So there is a role for policy here.
Yeah, it's been a I guess a story that's been nagging at me all year is, and I'm focused on Boston, but you can make the same argument of New York or D.C., the whole corridor, or parts of the West Coast as well. But in a market like Boston, which is so dominated by education, dominated by life sciences, finance, is some combination of government cuts plus artificial intelligence going to make the Boston job market look fundamentally different than it did last decade or so? I think it's really tough to tease out an answer to that, but theoretically, it's easy to kind of stack those bricks for a very different labor market in the Boston area, given cuts to government work, grants.
Would solve the
pressure
housing
on the
crisis
education.
on the bright side.
It would solve the housing crisis rather rapidly. Let's take a quick break. When we come back, a little bit of trivia here next on the Financial Exchange.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. Margaritaville Resort Cape Cod is perfect for your next New England vacation. Located just off Route 6 in Hyannis, the resort has everything you need to enjoy an incredible week with your family or a quick weekend getaway. Along with first-class accommodations and food, Fins Up Water Park is packed with aquatic adventures that will keep the kids entertained for hours. The summer season is coming soon, so make plans today for a fun-filled vacation at Margaritaville Resort Cape Cod. For more information and to book your trip, visit MargaritavilleResortsCapeCod.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts and Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange. And in the 50 seasons of Saturday Night Live, only cast members typically stayed with the show for about 3 or 4 seasons. These days, cast members have been known to stay in the show well past 10 seasons. Trivia question today: who has the longest tenure as a cast member on SNL? Once again, who has the longest tenure as a cast member on SNL? Be the 7th person today to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt. Once again, the 7th correct response to text us at 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Well, anyone hoping for some relief on mortgage rates this year has been badly disappointed. The 30-year fixed-rate mortgage, according to Mortgage News Daily, is sitting at 6.99%. On that jumbo, you're up at 7.1%. And you're not really even saving much money for a 15-year, which is sitting at 6.3%. Tucker, by any chance, do you have our predictions on interest rates sitting around here? Because I think did we make mortgage predictions this year?
Yeah, this was back in December. Paul said the low fixed was 5.85. High was 7.1. Chuck had 5.2 as the low, high 7.8, and you had high now and low is 6.5. So what was the high back in December?
7.1-ish.
Okay.
So we haven't gotten back over that. So in any case, that relief does not appear to be on the horizon at the moment. What the Federal Reserve does not directly affect mortgage rates in any real way. What they control is primarily the shorter end of the curve, unless they're buying and selling a lot in the way of their existing balance sheet. But recently, Fed officials have been, I think, echoing a lot of the message from Jerome Powell when it comes to interest rates, which seems to be they're not going anywhere anytime soon. How would you summarize kind of the direction of Fed policy right now? Outside, unless they get removed by the president.
The forces of unemployment and inflation, the way they might put it is, the forces of unemployment and inflation appear to be roughly in balance. Maybe there's a slight bias among Fed policymakers toward worrying about higher inflation, a slight bias in favor of worrying about higher inflation relative to unemployment. I think if you,
do you think so?
Relative to, yeah, I do. I think they're really worried about the supply shock, so to speak,
because of what happened. Because I would say that was definitely not the case prior to 2021, but I think you're right. Only because of recent experience.
Sorry, I backed up 5 feet and screamed. The situation was totally different in 2020. We weren't generating enough inflation for the previous 12 years. Right. The Fed adopted a new framework in 2020 because they wanted inflation expectations up, anchored but up. They were far more worried about disinflation. Yeah, be careful what you wish for, guys. The situation could not be more different today, which is why they're going to revise their so-called policy framework again in an effort to reaffirm their commitment to low and stable, which they've defined as 2% inflation. Look, this you made the point that the Fed does not control. They don't really control any interest rate, but they exert heavy influence over short-term interest rates. Yes. The Fed controls the supply of money. Long-term interest rates are a function of expected short-term rates in the future. Why would you ever buy a 10-year bond when I could just buy a 1-year bond every year and roll it over when it matures?
Can you answer that question?
Buy a new one. Yeah, it's because you expect interest rates to change in the interim. Maybe you expect them to go down a lot. You think we're going to return to the 2010s when interest rates were very, very low. If so, a 10-year bond with a yield of 4.5% roughly right now is pretty attractive. Alternatively, maybe you think tariffs and other factors, fiscal recklessness, like we're arguably seeing from this new tax plan. I like the tax cuts, but they're not addressing spending. I call that reckless. I'm not just throwing incendiary terms out there. That's what I mean. Maybe you think short-term interest rates are going to be higher, as high as they are today, maybe a little lower, maybe a little higher over the next 10 years, in which case, I don't know, it's not really attractive to buy a 10-year at 4.5%. I can almost get that on the one maybe now and into the future, and I don't have to assume the risk of rates changing a lot more than are expected in the interim. So, Mike, the relationship between short and long-term interest rates is so complicated that researchers have this term that they use to describe the difference. It's a little mysterious. It's called the term premium. People don't usually talk about it outside of like a finance class, but it can be inferred from the difference between long and short term and then expected short term interest rates. It all gets a little bit convoluted, but there are structured ways to think about it.
The Federal Reserve's current target rate is for 4.25% to 4.5% on that Fed funds. We got as high as, was it a full percentage point higher?
5.25 was there.
So where you've seen that has been on CD offers, on money markets that have all come down by about a percentage point over the course of the last 12 months or so. But what's more interesting to me is when we look out over the next few meetings. So first off, there's a meeting coming up a little bit less than a month from now. 95% chance that Fed does not move rates at all from their current levels. If we go all the way out to the end of this year, however, this is where you've seen big change over the course of this year. So the most likely outcome on the CME FedWatch tool, which again is not really a good predictor of where rates will end, but rather where people are kind of placing bets about how far rates come down, you've got a 39% chance that rates are half a percentage point lower than where they are right now. You've got more than a 50% chance that they're lower than that, but this has changed quite a bit. There is a lot of baked-in assumptions about rate cuts coming this year, and they seem to have been wiped pretty much off the board. We've got to take a quick break. We'll cover that a little bit more, along with the trivia winner, next on the Financial Exchange.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Congratulations to the students and staff of Emergence Academy in Springfield, Massachusetts for their winning submission to the state's Power of Presence initiative. The school's amazing video will help spread the word about the power of students being in school every day. To see the video and learn more, visit us at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
A solid financial plan has many layers, and trusts are often a core piece. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Understanding the various kinds of trusts that exist can be extremely beneficial to your strategy. If you're retired or nearing retirement age, a trust may help you with a wide range of issues, such as asset protection, tax efficiency, and avoiding probate. Call us today at 800-393-4001 and ask for our new guide called Trusts and Your Financial Plan. We'll discuss a number of different trusts and the areas in which they may help and how to determine which which one may be right for you. Even if you already have a trust in place, this guide can provide a description of certain issues that may arise and could help you decide if changes are needed. Call us today at 800-393-4001 and get your guide today. Or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange quick tip of the day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? Simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Trivia question today was, who has had the longest tenure as a cast member on Saturday Night Live? That would be Kenan Thompson. He's been with Saturday Night Live for 22 seasons, still going strong. He beat out Daryl Hammond, who served for 14 years on the SNL cast. Nick from Falmouth is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Nick. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
The cost of moving freight around the world has increased a bit over the last week, but not nearly as much as some of the worst-case predictions that were out there. There is an index called the Drewry World Container Index, WCI, which hit a COVID peak of nearly $6,000. This is the U.S. dollars per 40 feet of container stuff. I think it's Shanghai to LA. That's how I'm going to describe it. Container stuff.
Yes, container stuff.
That hit about $6,000 back during November of 2024 and higher during peak COVID times. But as of this week, it's moved up about 8% off of those recent lows that we saw, indicating to me at least that while there's probably still a lot of stuff moving from Shanghai and all of China over to the United States, it's not so much volume that these countries were unprepared for it, that the United States infrastructure system was not prepared to deal with the volumes. And I don't know, it seems unlikely that we're going to get to a point where it's causing a significant amount of inflation. The pandemic peak on this index, by the way, was $10,377 back in September of 2021. So we are sitting about 80% below that, even with the most recent increase. So could this still result in some measure of inflation that we can discern. Possible. It's still early. Perhaps, the manufacturers took a little while to fire up over in China and actually get this stuff onto boats. But for the time being, at least, and this is Bloomberg's main point too, that feared tsunami of cargo coming from China, they phrased it as looks more like a swell, and some of the data that's behind all this is seemingly backing that up, at least for the moment.
Yeah, the inflation danger, I think, comes from the tariffs themselves.
Yeah.
Prices getting passed through.
But this was a question mark. We had raised this question as well. Like, hey,
no, I'm not saying
is it such a demand for goods coming into the U.S. that you're going to snarl up supply chains again, and that's a contributing factor? I wasn't sure. I thought that was a possibility.
You should never be sure.
Doesn't seem to be at the moment, which raises other questions, right? Like, are suppliers buying as much as we thought they would, or are they just saying, hey, buy what we need for the next couple months, let's not worry about the holiday shopping season because we think the tariffs potentially could be even lower? Or is this just a very well-oiled supply chain that knows how to deal with this stuff post-COVID better than they did?
I mean, the big risk here, I know we talked about the Fed in the last segment, but the big risk to the economy, the big challenge for the Fed is that inflation expectations, particularly by the Michigan survey, but by others as well, have gone up. Michigan survey, they've gone up like through the roof, highest since 1981. Inflation expectations feed into actual inflation. They sort of become self-fulfilling. The Fed, even if they wanted to ease in response to, say, the negative GDP report we got in the first quarter and the slight rise in unemployment over the past few months, they probably can't because inflation expectations, some researchers would argue, have become unanchored again like they were during COVID. So
what was the most recent Michigan sentiment survey?
High sixes. I want to say
sixes?
six and change,
6.7
or something.
To explain what that means, of the people that this survey spoke to, which has been in place for 80 years they've been doing these surveys, the average, or I don't know if it's average or median, expectation for year-over-year inflation is now in the mid-sixes.
Yeah, and that is squarely due to, that is clearly, unequivocally due to tariffs. I'm actually impressed that people are internalizing, so to speak, that if this were not my little area, I'm not sure I'd know what to make of it. It's like when I hear that, as the FDA announced today, they're changing their guidance on COVID vaccines. I don't know if I should be mad, happy, or indifferent about that. Just not my area. But this is a case where I didn't think it's so abstract. I wasn't sure people would get what tariffs are. And the politicians are obfuscating. Oh, they're not, they're not taxes, or they are, or so you get a lot of noise in there. Yeah, they get it.
Yeah, they seem to.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently two of their beaches, Trunk Bay in St. John and Megan's Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visit USVI.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visit USVI.com today. That's visit USVI.com.
The last time I personally bought a car was before this week, 2022, when anybody who bought a car back in 2022 remembers how miserable it was. I had to pay like a surcharge just to get the Honda Civic that I wanted above the MSRP. I couldn't find one. It was quite difficult. The market is not quite where it was back then, but we're seeing signs of it. In the used car market, there is less inventory. Prices have not ticked back up month over month, according to the most recent CPI report, but I continue to hear stories about this. And to share a bit about my recent buying experience, which is unique because I don't think there's a lot of minivans out there, but when looking for a new Toyota minivan, I called approximately 15 dealers in the Massachusetts area who told me that they had none in supply, and that they could put me on a waiting list for one that was going to be available in July. The 16th did have one, and I was able to find one. When I went to go buy it, I was seeing some of the similar things that I saw during the COVID age. They came in with the manufacturing price, and they said, normally we would charge you a $2,500 market value assessment surcharge on this car because they're so hard to find, but if you make this deal happen today, we're willing to waive that and we'll give it to you for MSRP. And I think you're starting to see signs of that elsewhere in the auto market here and there.
Plus, they knew you had a funeral this week and you needed the vehicle.
I needed the black vehicle, exactly. Yeah, I had to go attend one of those. But in any case, you are starting to see this in areas of the market. Maybe I'm just a bad negotiator, but here was the answer. I needed a new car. And I called 15 dealerships, and only one of them had the car that I wanted. So I didn't feel like I was approaching it with a really strong negotiating position. But on average, what you're seeing here, according to a piece from Market Watch, used car buyers being charged an average of $640 in surprise fees. And seemingly it's the same thing we're seeing from other sellers of goods, which is the tariffs are kind of giving cover for dealerships to tack on fees. Some might call it a bait and switch. Some might call it supply and demand. I guess it depends on your perspective. But everything from VIN etching, wheel locks, in other cases, just charging higher than standard
VIN
rates.
etching. Can you opt out of that?
Yeah.
Actually, I really don't want a VIN on this. Okay.
Reconditioning fees are going for an average of $1,600 on used cars. These are all the add-ons that you get talked into, and in Massachusetts, they actually have to record those conversations in the business office. Did you notice that when you bought your car a couple of years ago?
Yeah, there was absolutely no recording device in that office.
Really?
At least I wasn't informed. They'd have to disclose that.
Yeah, in the office that I went to, there's a giant sign that says recording in progress if you enter this room, because from what I understand in Massachusetts, maybe all or at least some of the business offices have to be recorded because they were kind of so badly abused over the last few years.
Interesting. Huh.
But in other cases,
for their own protection. Somebody asserts that you did or said you misrepresented something. I bet on balance that benefits dealers.
Maybe, but I bet it's also a legal requirement. I doubt that it was the dealers that said, hey, we're going to voluntarily record all the conversations of our business managers trying to upsell customers on all sorts of protection plans that they may or may not need. But you are seeing this stuff, and it is showing up a little bit more, according to the experts, than it did just a year ago. And again, I think that's all supply and demand. There's been a lot of people front-running the tariffs.
Why do they itemize those things? Guys, the price is the price. I assume you're going to clean the car. I assume it's going to have a VIN on it. I'll gladly pay for that.
One would assume that, yeah.
Why do they itemize it? Is there something psychological about that? Are you more willing to pay it if it's itemized?
No, but you're more willing to show up at the dealership for the price on the website that doesn't reflect all those extra items.
That was a naive question on my part.
Right? I mean, that's the answer, is once they've got you in there, they think they can make that sale and add on all those extras after the fact, just like...
Hey, while I got you in here, what do you think about this package?
I mean, guys, this is no different other than the dollar amounts than buying tickets from Ticketmaster or... airline tickets on Kayak or whatever tool you use. They advertise the lowest price they can possibly advertise and then just tack on the baggage fees and the seat choice fees and the recliner fees on top of all of these things in order to get a higher price. Let's take a quick break. When we come back, Stack Roulette is next.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Trust can play a key role in your financial strategy, and understanding the different kinds and their purpose may help you make the right decisions for your overall plan. Hi, this is Chuck Zada from the Armstrong Advisory Group. Trusts are utilized for a variety of reasons, but the most basic use is to make settling an estate easier. Trusts have the ability to bypass probate, which can save you significant time and money while allowing your assets to be distributed directly to your beneficiaries. Our new guide this month is called Trusts in Your Financial Plan, and you can get it by calling 800-393 800-393-4001. Learn about trusts and their possible benefits to your financial strategy by requesting your free guide today. That number again is 800-393-4001 or request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. Creating an estate plan can be a difficult process if you aren't working with an expert who can make sure your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and their new monthly guide is called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may correct an issue that could come back to haunt you in the years to come. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. That's 866-848-5699 or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and as we get set to honor our veterans on Memorial Day, now's the perfect time to register for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston.
Tucker's hoping to finish in a PR under 2 hours this year, so it's going to be a particularly exciting race. In when is it, November?
What did I say, November 8th?
Yeah. I think it's my third or fourth year.
Yeah, Saturday, November 8th.
Are you going to run one of these ones, Tucker? Or?
Saturdays are tough for me, but I'll see if I can make it work.
Right, fair enough. In the latest story of why social media sucks, 2 Providence school students and a staff member were brought to the hospital after what's called the Chromebook Challenge incident, which is where you just stick objects into Chromebooks, which are little tablets, in order to see if you can destroy them by, making them smoke and short circuit and just destroy themselves, which can obviously be a hazard to the Chromebook and all those around you. And my point about why social media sucks is that obviously if you tell a bunch of middle school students that they can stick a staple into a Chromebook and light the thing on fire, then they're going to do it. And my point with all of this is...
Yeah, I'm tempted right now.
Yeah. Mark is just itching to go do this. Kids are not any smarter or dumber than they were 30 years ago. In middle school, when I was in Medfield Middle School, a kid poured a gallon of gasoline, maybe not in a gallon, he poured a significant quantity of gasoline into the bathroom toilet and lit it on fire just because he thought it would be funny. And
I mean, it's kind of funny.
It wasn't funny because, it caused probably thousands of dollars worth of damage. But he also wasn't able to create the light your middle school toilet on fire challenge and encourage a bunch of other, 12-year-olds to go and light their toilets on fire. And this is why social media just sucks. And
I'm picturing you as a middle school kid warning him that we may not be insured for the hazards he's creating or some...
I've just got my calculator and my pen protector in there like, oh, this isn't a good idea.
I just got to school my minivan.
Fairly shoot
my voice was a fair bit higher, too. But
your property taxes could go up as a result of your reckless actions.
This is exactly the argument that I was trying to make, and believe it or not, he lit the toilet on fire anyway. So, yeah, this is the problem with social media is that whether it's the Tide Pod Challenge, there are a lot of dumb, dangerous things that middle schoolers do, but up until recently, they didn't have the ability to inform the entire world about them and encourage others to follow them in kind. So...
Yeah, I mean, social media should flag this stuff. It's as simple as that, and they don't.
Yeah, well...
It's as simple as that.
That costs money. Mark, what do you have for us for Stack Roulette?
Elon Musk was speaking to the Qatar, that's QATAR, the country. I'm always confused as to how to pronounce it. But anyway,
I thought you were talking about a box cutter.
There's an economic forum in Qatar. Musk was there, and he announced probably wisely and to his great credit that he'll be stepping back from his more visible political role. I assume that means no formal role going forward with this or any other administration, as well as curtailing political contributions. He feels like he's done enough. He wants to focus on Tesla. He's committed for the next 5 years as CEO at least. And shareholders like it. Stock's up 5%, so probably a good move.
He's got some work to do. I mean, granted, I live here in Massachusetts, which is not exactly a conservative area of the country.
No
but
kidding.
I would say that more often than not, when I see a Tesla on the road, there is some form of anti-Elon bumper sticker attached to it. Again, it's Massachusetts. I'm not surprised by any of this, but why that matters is because states like Massachusetts are where he was selling all of his Teslas. And so if that is more than just a Massachusetts trend and, they are not able to recoup that marginal buyer on the Tesla vehicle or create a new market for them, I'm open to that idea that conservatives are suddenly going to start buying Teslas, but the proof's not out there and the infrastructure is not even close to there because there's not a whole lot of Tesla superchargers in Iowa, for example. So we will see where this one goes. I think he's got his work cut out for him on the turnaround story when it comes to Tesla, but he's done it before, so I'm not going to say it's impossible.
And he found how difficult it is to make meaningful changes to government spending. I mean, he didn't have the legislative power behind him to do it. Obviously, that lies with Congress, and it looks
and
like
I think he spoke
today,
to that specifically. It's like,
it's going to be frustrating for a guy like him who's used to being king of the joint, and rightfully so.
Yep.
He more or less built the company up from nothing.
Speaking of Tesla, and autonomous cars generally, there's a new study out about social sensitivity and how cars need to be trained on behaving more like humans, or the drivers of those cars, which are robots behaving more like humans, which is confusing to me because I thought that was the entire point of developing autonomous vehicles, was that we all sucked at driving, we crashed too much, and so we wanted robots to drive the cars instead. But this study says, no, we need to behave more like humans with these cars. And now I'm just left wondering what the point of all this is. Because the promise, at least in terms of my opinion, was, hey, autonomous driving is going to make driving for everyone safer because there's going to be better reaction time. A robot can't get distracted by its phone, and therefore we're all going to become better drivers, insurance costs come down, and it'll be nice because you can go do something else while the car is driving. This study seems to point that in the other direction, but maybe there's
they're giving them little middle fingers now.
Yeah. Laying on the horn. The autonomous car is just honking at you.
Yeah, as soon as it turns green,
40
they lay on the horn. Yeah.
Markets remain in negative territory. Dow off 100 points or 0.25%. NASDAQ off 71 points, 0.33%. And S&P similarly off 0.33%. We'll be back at it tomorrow, folks. Have a great rest of your day. We'll talk to you then.